Well, if you were hoping for a reprieve from Sydney's surging property prices, this will come as no surprise. Australia's most expensive capital city has had yet another boom year, with the price of homes almost doubling in less than a decade.
It's the boom that's defying even the most optimistic predictions. The experts expected Sydney property price growth to start easing in 2016. It didn't.
The market just continues to go from strength to strength, really being driven by the fact that there's a lot of demand out there and there's not actually a lot of supply becoming available for sale.
Last year, Sydney dwelling prices, that's houses and units, jumped 15.5%, up from 11.5% in 2015. Again, the best growth of any capital. In fact, home values increased around $10,000 every month last year. Since January 2009, prices have almost doubled.
We have seen stronger growth than that in the past, but obviously as prices for houses now in Sydney are nudging up towards $1 million for their median, there's going to be a level of people that simply can't afford to buy.
When it comes to keeping prices in check, if there's any relief in sight for home buyers, it might come from interest rates. Now, the Reserve Bank has been on hold, but our big lenders haven't. They started lifting their rates towards the end of last year. Any significant lift in rates could also have an impact on mortgage defaults, already starting to rise slightly. Surprisingly, perhaps, the latest research predicts the suburbs likely to be hit hardest will include upmarket Newport, Gordon and Bayview, along with Duffy's Forest and Warriewood. Among those with the lowest likely mortgage stress, Bidwell and nearby Colleton in the west.
I don't think that many households will really be badly impacted next year, but I think a couple of years down the track, unless incomes begin to grow more quickly, then we'll see significantly higher default rates later.
EDDY MEYER, 9